So I'm going to try answering the question that's probably been on a lot of your minds. And is the Western Alliance Bancorp or Pacific Western Bank a great value or a shiny turd? And we're going to try answering that question today in the most objective way possible. So without further ado, let's dive in. We're going to start off with Pacific West Bancorp first, and then we're going to go into Western Alliance. So you can see on the day, so everyone knows that Pacific West fell about 52%. We were covering in the live stream last week and then had a massive recovery. Well, here's the facts for the bulls. You do have what could be considered a volume capitulation rebound, and you can also consider this for the bears a dead cat bounce. There's evidence to both, where you have significant volume like I mentioned, and now you're fading that volume, which is kind of a bearish sign. The reason I say it's a bearish sign is because you don't have that continuation outward, similar to how Tesla, and mind you, whatever your opinion is of Tesla, I'm using this as an example. You see how the volume basically, after its recovery, it spiked and then fizzled out, but took a very extensive long time to fizzle out. And you see the peak actually occurred on the way up. It didn't actually occur on the way down, which allowed it to basically recover, which is missing from PacWest. As you can see here, you have your initial spike of volume, fading it out, consolidating sideways, and now breaking down lower. So what does this basically set up, or what could we be setting up? Well, the simplest way is an A to B pattern that probably lands up at zero if you're bearish on the company. If you take and consider today's peak, basically the top, or last night's peak, I should say. So that brings you down to negative $2.10, so FRC mode and going lower. Or are you basically looking at this like in a significant buy? I really can't tell you either or. For me, stocks that usually have a dead cat bounce retrace about 50% of the way. So you can clearly see here $7.28 was 50% of the move. And if we basically take it to the second candle body, you also have that basically playing out. 50% of the move, $7.28. The high of the previous day, $7.50. So 50%, you may be setting up that A to B pattern. There's more evidence showing that that A to B pattern is setting up. Now, what do I not like about the chart? And you guys know me on the channel that I don't like gaps in charts. That's just a personal thing that I don't like trading companies that have gaps, just because they're poles of volume that basically are attracting areas. So if I don't see a gap to the upside, which I don't, I see a gap to the downside, my eyes are mainly looking bearish. And now the stock has fallen a significant amount of percent. You have PacWest also saying the same things like FRC, that they're looking at strategic options and that they have basically not a lot of time left in this world before they need to get bought out because they're burning through cash flow. And now you may not have to panic that you had FRC, because FRC also on top of that news put in about the deposit outflows and confirmed the deposit outflow fears, whereas PacWest just gave you one piece of the puzzle, didn't give you the other. To me, the simplest way I can make it is you don't trend below a previous area that you basically bounced off at, which is $5.26. In my opinion, if you break that, you're basically going to completely collapse the stock. There's going to be very, very little chance that you recover at that point because there's not a lot of price structure down here. So if we take a look at the monthly chart just to see that the lowest in the great financial crisis was $5.81. Your low now was $2.48. You basically took out all-time lows, you made new all-time lows, you're basically going straight down on the monthly view or the larger time frames. And with everything, now I'm not saying that the stock can't recover, guys. Like, I'm trying to be as much objective as I can. I know a lot of people are gonna try playing the hype train and tell you the stock's a great value, or they're trying to tell you, oh, market crash, because they gotta serve their own egos. But basically $5.26 is the line in the sand, I would say, for the completion of the A to B pattern to basically be confirmed. I don't think you actually have to trade below the $2.50 or the new low to basically confirm it, because at that point it's set in stone. If you come back down to $2, you're just, there's no mercy at that point. Also psychologically, from the close that we are now, the level I'm saying is about 12%. And then if you fall, once you get to that 30%, you're starting to gap. You're all bets are off at that point. Now, let's play the bullish side. So if you have the recovery on the way up, let's say this is a V-shaped recovery, similar to Tesla where you kind of angle your way, I want to see that retest of the 50 daily moving average before I even say this company is bullish. Previous resistance or previous support is now resistance. So next $8.70 will most likely be my first resistance point, and it's going to coincide with a localized high of the beginning of the sell-off, probably right in the middle of a 4-hour zone. If we look here, right where this candle started, it's going to be an area where we're going to find resistance. As you can see here, you had a gap up. Gap ups are usually for selling. So what do? We basically faded the gap the whole day. Now, if we go and look algo, then we can clearly see we're in a price target zone. This is the 4-hour view, guys. MACD has crossed, so there is maybe some price appreciation. RSI is not oversold yet. If we look at the daily, this is where I give pause. And now I have traded and been the victim of this trade more times than I can count in my younger trading days, where I saw, oh, MACD's curling towards one another, hasn't crossed yet. I'm going to get in. I'm going to be early. I'm going to beat everyone to the punch. And then the trade basically ran me over. Now, you have a MACD divergence here. However, guys, let me be explicitly clear with this. MACD divergence just means the MACD has to have a positive slope to the upside while price is going down. Now, you theoretically created a bottom here, but do I think that MACD divergence is going to play out? I'm skeptical. You could form another low here, which then would indicate maybe a push up and form another low. But this is just one bullish sign on the chart where you do have that divergence. FRC had the same divergence. Where's FRC now? Again, I rest my case with that. You have an RSI divergence. So you have a lot of divergence because it's such a sharp move down. Now you're in this price targeting zone. You could be coming down to the basically zero level. Now you're on the reversal zone. You popped out of it. So now you have basically downwards price appreciation possible. The reversal zone is not necessarily going to hold you up. I do believe PacWest is probably going to trade sideways at this level, similar to how Credit Suisse was for an extended period of time. And I don't think you really get the carnage until July with their next earnings, where basically maybe the fears that bad things are happening or the rumors get confirmed. Because remember, fiduciary responsibility, the CEO, if it's something horrible, is going to have to tell the investors. The weekly is looking more bullish when it's trying to cross. So I would give it some time before I get into PacWest. I would like to see that sideways consolidation, form that coil, and then push to the upside, because that's going to have I want to see that large volume push. I don't want to see any gap up get sold off. I want to actually see the bulls defending, not necessarily having this be just pure profit taking for the bears, where the shorts are closing out. How do shorts close out? They've become buyers. So with that, I think you have to be cautious of PacWest. I do see the possible potential for the stock to go sideways into a buyout where they find a buyer. Would I be looking at this as a long-term investment? Absolutely not. Short-term play, I think it's too risky even for that. Now, if you're day trading this and you have the time to basically monitor your trade and have proper risk management, have at it. As people that watch this channel, mainly I'm assuming that you guys are longer-term investors / swing traders. There's better things to invest in. There's better things to swing up. There's better things to swing down. I wouldn't even try shorting this because I think the liquidity would dry up if you have a bear squeeze. And I think going downwards, you just don't want to deal with trade being halted on you and trying to get out of it and try to get your money out of it. So it's just overall, I wouldn't necessarily want to partake in this trade at all. Next, we're going to go over to our final bank for today, Western Alliance. So Western Alliance's chart looks a little bit better on the 4-hour and the daily as well. Do I say that? Well, number one, you haven't made a lower low than the previous low, and you're seeing volume spikes. So you're having positive price appreciation, in my opinion, and a big consolidation in this area. You had the big SVB dump, and then you had the FRC dump, and they're equaling out. So this is a stronger stock between the two. And as simple as I can make it, you basically are forming a symmetric wedge that I would say probably you're forming off the candle high here. Now you do have a pretty sharp downslope, so it's almost a descending wedge, which is a bullish sign. So there's more bullish intonations, guys, between this chart and the last chart, and maybe you can see the difference to kind of maybe recognize what's bullish, what's bearish. So between the two, if I was forced to pick one, I would basically be trading WAL rather than PacWest, just because one, WAL hasn't announced the strategic option thing. Their earnings are coming up in July as well. They already had earnings. All that catalyst is out. They actually had a massive gap on earnings. So just overall, I'm seeing more bullishness. You fill the gap that you basically have the gap down. There's no gaps to the low side. You're not going back to all-time lows. There's more bullish case to be made. Now, you can trade sideways for all existence here, but until you actually break out, basically trade above, I'm going to say the $34, $35 level, I wouldn't necessarily be looking bullish. To me, I'd basically be looking for that break of the 50 daily moving average and then the price appreciation to one, fill in this negative development area, I'm going to say here, and also this gap up here that's probably going to come back when you're starting into those moving averages, what may give you a catalyst to break to the upside. You got earnings coming up in July, so maybe it could be a late term earnings play. If you were gonna play it for earnings, and I'm not advising you guys do, I'm basically gonna say that you wait for a possible retest of this trend line here and then you go after it. We're gonna jump over the Lux algo just to see if it's telling us anything we didn't notice on the first chart. This is one of the things that you don't have on WAL that you had on PacWest. You don't have a MACD divergence. You can clearly see here our low for price and our second low here is higher than our first low. MACD, same story. So this does not qualify as a divergence, which my warning that I said for PacWest was that you don't want to play this until it starts curling. And with this one, especially because you don't have that volume divergence giving you the bullish intonations, you're basically looking at this like this can really stretch out and come back down to this lower consolidation of $20.76. That's where I'd be possibly looking to pick up the company if you're going to pick it up. And remember, come back guys to the $12.41, which probably be this area that if I was going to take a trade on it, that's where I'd be targeting. I wouldn't be targeting anything above that because it's a simple risk to reward at that point. You come down to the line, you find support, you bounce off, you go to the upper one, break it, then I have price appreciation versus I'm going to try getting in now and play the bingo bongo game between the two lines. I really don't like to do that, and I don't think anyone here likes to do that because you're just losing money. There's no risk reward, there's no plan, there's no risk mitigation. It's just overall absolute carnage. So now, if you continue to the upside, I'm basically seeing a resistance point, a hard resistance point at $40. I want to be looking to get past that, or even starting at the $36 mark. That's where I'd be looking to possibly get out. MACD, if you curl to the upside, would be significantly crossed. And that's where I'd be looking for that weakness on the weekly. If we take a look, we do have some, like again, that bullish intonation, which the big sell-off, MACD's trying to get back up to push a rip up. Now, are you going to get it? I don't know. You could just have a fizzling out across and basically turn it into a big nothing burger. But other than that, I think you have some potential with WAL. I wouldn't necessarily advise it as a long-term investment. I would be looking as a riskier play, waiting for that trend line basically break to the upside, or waiting for a retest of the lower to go long at that point where risk to reward is pretty significantly in your favor versus where you are now. And with that, guys, I'm actually going to show you two articles that I found very, very interesting. This was from Federal Reserve. 722 banks report unrealized losses over 50% of capital as concerns over U.S. banking crisis grow. This was a report done back in November of last year. So you kind of saw this whole carnage coming, where if this many banks are having problems, then yes, your Federal Reserve facility that was the discount window and the new one they created may have eased this, but it's not going to solve it. It's just a loan. They're not going to be able to solve the problem through that new facility. These banks, as interest rates are going to be raised, the carnage is going to increase. All the facilities do is just offset the time. Just gives them more time to figure out their stuff, and you really can't at that level, in my opinion. And here's the thing, you got 722 banks. Let's say 90% of them actually solve everything they're going to be doing. It still means one or two can fail, creating the domino effect, creating the panic, the loss of confidence, and basically it's just a gigantic carnage mess at that point. And with that, guys, Like Warren Buffett said, he's not looking to invest in the banking sector, and neither am I. I'm basically staying far, far away from banks, unless I'm doing maybe some short selling, but I would cautious against that just because there is a lot of euphoria and a lot of volatility in the banking sector itself. As you can see here, PacWest went up almost 85% on the secondary bounce from the low. So we're definitely going to have to be cautious about shorting any banks, because you see these violent pumps to the upside and you have the violent pumps to the downside. Right now, I'm probably looking, again, I preach this almost every week now, start taking a look at bonds. That 5.3% on the 1 year is very enticing. You don't have to tie your money up for a very long percentage to get an annualized return of 5.3%. Now, that is like 0.5% on a monthly basis, but here's the thing. You're getting 0.5% guaranteed, no risk, and you just keep rolling until the Federal Reserve breaks something. And guess what? If it takes 6-8 months, you get a 5.30 risk return. You can sleep better at night. You're probably going to be healthier because you're not going to be worrying about trying to beat the S&P 500 by some crazy percentage. You're just going to say, I'm going to take my 5.3%, call it a day because I missed the rally, and let stuff play out. But again, thank you all for watching. Throw a comment down what you thought of the video. Throw a 1 if you think the banking crisis is over. Throw a 2 if you think there's more carnage to come and that you agree with Warren Buffett. And if you guys could also throw like while you're down there, it really helps the YouTube algorithm and the channel out. And let your friends know about these videos. We try to cater to our viewers, so give it a share. It really helps the channel out, and I appreciate your time. Have a wonderful day.